With the Nigerian economy gradually opening up due to more market-oriented policies, the country has sustained its bullish position in the equities markets and is increasingly becoming an attractive investment destination to many foreign and local portfolio investors. Cardinal Stone was a huge beneficiary of positive investor sentiment in 2023 as it closed out as the #1 securities trading firm on the exchange, having traded over 400 billion naira worth of trades on the exchange, and it's a position we've held 2 years in a row. Banking earnings saw new highs in H1 and Q3 2023 due to the implementation of pro-market reforms and proactive net long dollar positions across the space. The Apex Bank has communicated plans to keep monetary policy tight to rein in inflation and to stabilize the naira. These monetary policy initiatives and bold reforms on the fiscal front, such as removal of the subsidies on PMS, serve as a compelling backdrop for our discussions today. This conclave of economic and business thought leaders is strategically timed as companies are setting the tone for their strategic objectives and initiatives for 2024. Our primary objective is to facilitate insightful discussions and provide a platform for addressing pertinent economic developments. We hope that today's engagements will unearth valuable strategies to boost collective progress in Nigeria's ever-changing business landscape. Given these considerations, we have thoughtfully curated a diverse panel of experts who will provide valuable insights into various sectors within the economy. Our event theme, aptly themed Beyond Reforms, Strategizing to Boost Collective Growth, aims to delve deeply into tactical approaches that can propel growth and drive positive change in the Nigerian economy.
Inflation is currently, like I said, the highest point we've seen in 1996, 27-year high, right? And 3 key things is very important when explaining Nigerian inflation. We try to check an analysis for 30 years, and we discover that 50% of inflation over the last 30 years in Nigeria can be explained by money supply. Secondly, 25% is attributed to FX devaluation, and then the last is idiosyncratic risks that we cannot attribute to any specific factor to, which means it is more of diverse factors. Now, money supply currently is at the highest level we've seen on record, and that we think is partly contributing to the elevated numbers that we have. Aside from that, energy costs, inflation, the devaluation all contributed to the rise in inflation that we saw in 2023. 2024, we think that inflation will remain elevated, well above the long-run average. But there might be a slight moderation when you compare it to 2023. I would think that this will largely emanate from base effect, basically. Nothing serious, nothing special. While we understand the governments, the monetary authorities are trying to rein in inflation, we think that inflation will remain elevated. They've guided, that's the CBN, that the inflation target for them, they've been having conversation around inflation targeting. They've come to a conclusion that the inflation target for Nigeria is about 21%, about 21.8%, which is close to our own forecast of 22%. Aside from that, they've guided that they will continue to hike interest rates. A report came out recently by Bloomberg this week that the CBN would likely do about 500 basis points, come the February meeting. We think that we are looking at about 100 to 150 basis points for the year, basically, right? And the monetary authority, we like what they are doing at the moment, the fact that they are taking conscious efforts to bring down inflation and as well as to tackle issues like backlog, to attract foreign investors. We like that. So for us, inflation will remain high, 100 to 450 basis points from the monetary authorities. And then on FX, which you think is a big element in the room, currency remained pretty much pressured. Last year, we saw almost 50% currency depreciation, the highest that we've seen in a year on record. And in fact, the currency depreciated more than the parallel market. We barely see that, right? And we think that part of this pressure is because of the illiquidity of the FX market. The foreign investors, that didn't come back that were expected. all contributed to this pressure that we saw last year. But 2024 could bring a bit of hope. While we expect currency to remain pressured, while we are forecasting about 1,000 levels by the end of this year, we think that the current account position is suggesting that there is a bit of comfort. One, Nigeria will likely experience improved current account position because we think imports will likely reduce next year. Dangote Refinery is coming on board. That should reduce the magnitude of PMS and other oil-refined products that we import into the economy, which should help to reduce the outflows of dollars from the economy. Aside from that, we think that the oil production we're expecting to improve, and the still elevated oil prices, cumulatively should support the current account position. So overall, FX will cross 1,000 by the end of the year, while current account position should improve. In terms of foreign inflows, do we think that foreign investors will return this year? The CBN has cleared about, I think close to $3 billion in backlog, and they've shown commitment to clearing other backlogs. We think that if they're able to clear all these existing backlogs that we have, and they improve liquidity in the market, we've gotten funds from Afrexim Bank. The Minister for Finance came out recently that Nigeria could enter the Eurobond market, and we are still expecting other line of sight funds. If this can happen and Nigeria can improve FX liquidity and as well as supply, maybe back or close to pre-pandemic level, where we used to do about $3.2 billion on a monthly basis.